I think what surprised me the most is fairly intelligent people and entities not realizing everything I just said to you fast enough, right? For example, it seems quite evident, right? If you were doing, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage, right? Doesn't make sense.
Since the crisis at FTX began, Bitcoin has plummeted from $20,000 a coin to $15,859, its lowest value since 2020. The wider sector has fallen more than 5% since the collapse happened. Big companies and protocols that have exposure to FTX are having to prove their own liquidity. A popular token on the Solana protocol, for instance, that lets users of that blockchain trade Bitcoin, relies on FTX for its value. If the exchange goes under, it is unclear whether any of the Bitcoin on that protocol would be retrievable, wiping millions of dollars from existence overnight. And, as with every crypto crash, all eyes are on Tether, the $70 billion stablecoin that underpins much of the sector's economy. On Thursday morning, the token slipped off its peg, trading at $0.98 to the dollar. The chief technology officer of the company that issues Tether, Paulo Arduino, tweeted to reassure investors, noting that the company had processed about $700 million of withdrawals over the past 24 hours. No issues, he said, and we keep going. The financial impact of the collapse extends far beyond the immediate FTX customer base, too. The week's events have sent other crypto coins into a downward spiral, with the price of both Bitcoin and Ether falling by more than 10%, wiping upward of $60 billion from the market. Large sums of Solana were owned by FTX and its subsidiaries, and therefore has been hit even harder. Michael Saylor, the co-founder and the CEO of MicroStrategy, delivered his ideas and views on the value of crypto in the wake of FTX's fall in an interview hosted by Natalie Brunell on her YouTube channel. He said that it is an incredibly expensive lesson and fundamentals of monetary theory and banking, that the money under the control of human beings cannot be trusted as a whole. He added that Bitcoin, being a decentralized coin without the interference of any third parties, can be trusted more than any fiat currency. He emphasized the opinion that many other cryptos will collapse, as much as 95% of the current crypto assets. Before we hear him out, please take a moment to smash the like button and subscribe if you are yet to do so. Thanks for watching our videos.
But it surprised me that so many otherwise intelligent people put so much money into these things.
Big institutions.
Why would a pension fund? Yeah. Why would a VC, investor, why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges? And why would they pursue these ideas in such an irresponsible fashion? And sometimes you almost want to tweet, like, people will literally lose $1 billion chasing after these crypto casinos before they'll put $1 million in Bitcoin. It's just fast money, borderline greed, I guess, thinking that somehow Bitcoin is too straightforward an idea. It's like Bitcoin is too honest, too ethical, too rational, and so the conclusion is I have to skip over that and I have to go for the next thing, the next Bitcoin or the next good idea.
I think Bitcoin's boring.
And so that's what surprises me, that people with billions of dollars in education that should know better, when they're granted something which is ethically sound, technically sound, economically sound, and the first perfected money and the first truly open, fair, decentralized monetary network in the history of the world, when they're staring at it, their reaction is, it's too boring. How do I take another crypto risk? I guess it just takes, these billion-dollar blow-ups of Celsius and Voyager and FTX for some of them to start to get the idea that Bitcoin is the innovation. And they should come back to basic first principles. If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulators said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit. Right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange, and a path to registration of a digital currency. Right? And if they said you want to issue tether, you have to file monthly statements, register with this, banking supervisor, and take on these responsibilities to have these reserves and abide by these guardrails. You can issue a stable coin. If they said that, if they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do. Then what you would see is a collapse of all the true scams. You would see the VC that have been trying to launch these other things. They would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say this is too hard. You get the sense that some of them never bothered to hire a lawyer or get a legal opinion, right? It's like I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the U.S., but outside the U.S., the world wants it. So I think you would see some of those. I think you would see some digital securities. I think you would see, you'd probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way because they don't want to risk their reputation. The industry will morph. It'll change. And at the end of the day, Bitcoin will benefit from that too. It's not clear to me which approach is better for Bitcoin. The truth is, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin. And every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse, right? And I don't know what's left, but I mean, the argument in favor of a digital security is, wouldn't it be great if I could issue it faster and it traded 24/7, 365, and then someone could, like, if you said to me, you can take custody of your Apple stock on your Android phone if you live in Zimbabwe, and I can't get a JP Morgan account, I would think, okay, well, that's good. I can give Apple stock to my friend in Zimbabwe on an Android phone. So maybe the idea of a security circulating on a mobile network outside of the control of the 20th century banking system, maybe that's a good idea. But on the other hand, probably the digital security I want is Apple, as opposed to, all the crypto securities that are out there.
In another interview with Fobex Business News, Michael Saylor pointed out that the downfall of FTX exposed problems with crypto exchanges and will likely drive more investors to Bitcoin. Saylor pointed out that FTX created tokens such as FTT and Serum and promoted others, then allegedly transferred them to Alameda, the hedge fund of FTX founder and CEO Sam Bankman-Fried. At that point, Saylor said, since the supply was largely in friendly hands, they were able to manipulate the price of those tokens up through insider wash trading. Saylor said Bankman-Fried did not just create $14 billion of errant tokens via insider trading, he then attempted to post them as collateral for a $10 billion loan, but the only bank willing to grant the loan was his own. That is how Bankman-Fried, according to Saylor, very quietly and in duplicitous fashion, siphoned off $10 billion or more of real assets out of FTX and Alameda, where they proceeded to spend the money on politicians and lobbying and stadium rights and advertisement and celebrity endorsements and condos in the Bahamas, and then they traded a bunch and made a bunch of bad trades, and then they lost the money. What do you make of Saylor's interview? Please let us know your opinion of the video. Thanks for watching.